Good morning, everyone. My name is Davon Barbour, Vice President of Advocacy and Economic Development for the Hollywood Partnership. On behalf of the Board of Directors and our President and CEO, Chris Larson, I would like to welcome you to the Q1 Hollywood Market Report Overview. Today's brief presentation is the first of several that will coincide with the release of each quarterly report. The report assesses commercial real estate conditions and local business conditions within the Hollywood Entertainment District and Greater Hollywood. And now I'll share my screen with you, and we'll begin today's presentation. By way of background, the Hollywood Partnership is a 501c6 nonprofit established to manage the Hollywood Entertainment District. The bid was renewed back in 2019, and our area of focus is primarily the Walk of Fame, Sunset Boulevard, La Brea Avenue Gateway to the west, and the 101 freeway to the east. Our property owners and stakeholders represent a diverse array of property types within the HED, including office, industrial, retail, nonprofit, and government uses. In fact, more than 600 property owners fund our operations that include cleaning, safety, hospitality, and more. Hollywood is a small neighborhood. However, it makes a huge impact. Hollywood represents 0.3% of the city's land area. Yet, Hollywood is a regional center of importance. Over the past decade, employment has grown 3 times the rate of the city and 4 times the rate of the county. Plans are underway to strengthen this stature through the Hollywood Community Plan Update, a critical regulatory framework that will guide development activity within Hollywood for decades to come. Hollywood is a valuable contributor to the city's financial health. The assessed value of the Hollywood Entertainment District is $5 billion, or more than 8 times an average square mile citywide. Now let's jump into the Q1 report. The production of this report is made possible by several public and private partners who generously contributed valuable content. This content includes data, market intelligence, and photography. Content credits are noted throughout the report, while a complete list and complete source listing is provided on page 35 of the report. Also, the report is organized around 3 focal themes: visiting Hollywood, living in Hollywood, and working in Hollywood. We'll first take a look at hotel market conditions. 2020 was certainly a challenging year for the hospitality industry. However, there is reason for optimism. Hollywood's hospitality market demonstrated positive signs of recovery as travel restrictions eased throughout the state. The big takeaways are a 22% increase in hotel occupancy in Q1 compared to Q4 2020. Also, there was a 14.29% increase in RevPAR from $14.16 in Q4 2020 to $50.47 in Q1. Hospitality investment has also not slowed down. In fact, 14 of the 17 projects are located within the Hollywood Entertainment District. This figure represents an addition of 820 rooms within the HED. The existing Hollywood room inventory is 5,422 units spread among 64 properties. This slide on the screen now displays hotel development activity within the area. For more detailed stats on each development project, please visit the development activity summary located on pages 36 through 39. This table will include also multifamily and office activity. One measure of vibrancy through the district is pedestrian volume. There was a 61% increase in pedestrian counts from January 2021 to March 2021 along the Hollywood Walk of Fame. This increase is evidence of a rise in travel confidence. Overall, pedestrian activity throughout the HED has rebounded to 56% of pre-pandemic norms. As you can see by the graph on the screen, like comparable local tourist destinations, such as the 3rd Street Promenade, Venice Beach, Hollywood also enjoyed increased visitation as local restrictions eased and as vaccinations continue to roll out. While visitation throughout the HED increased, we cannot ignore the missing presence of the international market, which has historically been a major driver of traffic for Hollywood. In fact, according to the US Travel Association, if travel from the top inbound markets to the US is able to safely resume by July 4th and reach an average of 40% of 2019 levels for the remainder of the year, it would accelerate economic recovery by adding $30 billion in incremental spending and bringing back 225,000 jobs. Another positive sign is increasing metro ridership. The HED is accessed along the Red Line by two stations, one located at Hollywood and Vine, the other at Hollywood and Highland. You will note that ridership increases month over month in Q1. Also of note, I'd like to point out that as you can see, weekend activity continues to be strong and increases as we continue throughout the year. Let's now take a look at that multifamily market. With a vacancy rate of 10.4%, demand for Hollywood living continues to climb. In Q1, a total of 196 units were absorbed, a 400% increase in Q4 from 2020. Another positive sign is the increased average rental rate per unit, now at $2,182. This reflects an increase of $13 from the previous quarter. The average price now per square foot stands at $2.89. On the construction side, there are 886 housing units under construction in the HED. Approximately 700 units are expected to be completed by the end of 2021. Notably, 26% of these units are affordable and are meant to provide housing for low, very low, or extremely low-income tenants. On this next slide, I'd like to point out an example of how Hollywood's housing diversity. Hollywood Arts Collective broke down in Q1 and will add 232 affordable housing units to the community. This project is an important one as it will serve artists. As we know, artists really are the heartbeat of Hollywood and support our entertainment industry. On your screen now is a map identifying the names and locations of the various multifamily investments taking place within the area. There are 58 projects either seeking entitlement, entitled, or under construction. The breakdown is as follows: 23 under construction, 20 entitled, and 50 seeking entitlement. So quite a bit of activity, as you can see here, and more to come. We'll now take a look at office market conditions as well as retail activity within the area. At the end of Q1 2021, the Hollywood office market inventory consisted of approximately 5 million square feet of office space. While the office market is slower to rebound, with companies and employees continuing to elect working from home or working on hybrid schedules, Class A asking rents held steady at $4.80 relative to Q4 2020. Overall, vacancy rate remains less than ideal at 21.96%. By comparison, the vacancy rate for the greater Los Angeles market is 18.95%. According to Castle Systems, a national technology-based security company, only 25% of Los Angeles area employees have returned to the office for the week ending in March 24th, a figure which was down slightly from the week prior at 27.9%. Relative to other big cities in the US, the return to work figure for Los Angeles was slightly higher than the national average of 24.2%. On the construction side, both new investment as well as reinvestment continued in Q1. In fact, On Vine completed substantial construction of activity and has turned over space to tenants for custom improvements. I'd also like to mention that exterior work has begun on Ovation Hollywood, which is the rebranded Hollywood and Highland. This upgrade includes the conversion of 100,000 square feet of existing space into creative office space. Once major construction begins on the office space, it will be reflected in a future market report. We'll now take a look at ground floor retail conditions. When we assess retail conditions, it's important to place this in context in light of the ever-changing COVID-19 restrictions. We know that there were several fast-moving regulations We began Q1 in the red tier, which was the state's highest restriction of the highest restrictive tier of the safer blueprint for a safer economy. LA County quickly moved into the purple tier, and within weeks then moved into the orange tier. And as you know, we're now entering the yellow tier as of today. By the end of Q1, LA County had rapidly entered the orange tier, now the yellow tier. So this is something that we're really excited about. Notably, bars were able to expand with outdoor activity. We also saw an increase with indoor dining activity and gyms to also operate indoors. That being said, the HED now sees a total of 86% of its ground floor retail inventory occupied by operational businesses. In Q1 2021, Hollywood welcomed 4 new businesses. Most notably, these businesses were located at Target, 7021 Hollywood Boulevard. We also celebrated the reopening of the celebrated retailer Amoeba Music and their new home at 6200 Hollywood Boulevard. As you can see here on the screen, this is just a photograph of the ground of the ribbon cutting for that particular day. Loyal patrons lined up just the night before, camped out, and the line wrapped along Hollywood Boulevard, El Centro, Argyle, Selma Avenue. These are loyal fans dedicated to a strong retailer in our community. That concludes today's presentation. For a complete rundown on all development activity within the area, again, I encourage you to visit the active development summary located on pages 36 to 39 of your report. I also want to encourage you to stay tuned for additional information about upcoming real estate tours, as well as the Hollywood Community Plan update, which will guide development for some time now. Additionally, I'd also like to encourage you to contact us for information about our economic development services. They include research, permitting, technical assistance, as well as financial support for small businesses. And I can be reached on the screen with the contact information there. And so with that, I'm happy to answer any questions that any of our attendees may have. All right, well, it sounds like we're a quiet bunch and we've got a lot of power-packed information for you. But again, this session is really meant to be a brief overview. We know that everyone's time is valuable and that you're busy. So stay tuned. What we want to do during these sessions is provide high-level overview of the content. So again, I encourage you to please feel free to reach out and contact me. Again, I thank you for your interest in Hollywood and have a great day.
Wait, Davon, Marty raised his hand.
Oh, thank you.
Yeah, Davon, thank you for the presentation. There are some interesting stats that you had in the presentation in addition to your quarterly report. Will you be able to circulate your presentation you did today?
Absolutely.
Yeah, great. Thank you.
Any other questions? All right, well, I know we've hit you with a lot of information, but again, please visit our website. I will circulate a copy of my presentation to each of you today. So again, thank you. I also would like to send a big shout out to our design partner, StreetSense, for helping us redesign our report. So again, thank you for your interest in Hollywood. We hope that you continue to invest in Hollywood and have a great week.